Tesla has been on my radar for quite some time, but I couldn't bear buying the stock as its valuation was too high. But over the last year or so, the stock has dropped to a more reasonable valuation, and a couple of days ago, Tesla stock dropped even more following Q1 earnings miss, which got me interested in starting a position. So in this video, we'll do a deep dive on Tesla stock, including its competitive advantages, financials, Q1 earnings, valuation, and more, and find out if it's worth investing at current prices. My name is Riado, and if you're new to this channel, I do stock analysis on some of the most innovative companies in the world and help you find the companies of tomorrow. With that said, let's take a look at Tesla. So a little bit background on Tesla. Tesla was founded in 2003 not by Elon Musk but by two engineers, Martin Eberhard and Mark Terpening. Combining their love for sports cars and their concerns for global warming, the two engineers wanted to build a car manufacturer that is also a technology company, with a focus on critical components such as the battery, the software, and motor. So the two co-founders began their search for outside capital, and that's when Elon Musk came into the picture. So in early 2004, Elon invested $6.35 million into the startup, which consequently placed him as chairman of the board. Shortly after its funding rounds, Tesla revealed its first ever sports car prototype, the Roadster, which at that time cost about $100,000 each. And around the same time, Elon published Tesla's first master plan, which consists of 4 oversimplified steps. So the steps are: build sports car, use that money to build an affordable car, use that money to build an even more affordable car, while doing above also provide zero emission electric power generation options. So in other words, Elon wanted to make electric vehicles as affordable and accessible as possible for everyday consumers. But Tesla's master plan hit a roadblock when the global economy went through the biggest financial crisis since 1929. In addition, in 2007 and 2008, the company also underwent several CEO changes, 3 in fact, with Elon taking the big job on October 2008 in the depths of the global financial crisis. The turning point came when Tesla unveiled its second car, the Model S, which received an overwhelming support, including a $465 million loan from the US Department of Energy. This huge capital injection allowed Tesla to scale production and finally bring affordable EVs to the masses. Fast forward to the day, Tesla is now the most valuable automaker in the world, and safe to say, Tesla has completed its first master plan. But Elon is not done yet, as he had bigger plans for Tesla, and in 2016, Elon published Tesla's second master plan. So the steps include: create stunning solar roofs with integrated battery storage, expand the electric vehicle product line to address all major segments, develop a self-driving capability that is 10 times safer than manual via massive fleet learning, and finally enable your car to make money for you when you're not using it. So really ambitious targets, but let's take a look at Tesla's current product line to get a better understanding on how Tesla is going to deliver Master Plan 2. So Tesla has 2 major operating segments. First is the energy generation and storage business. In 2015, Tesla announced that it will be entering the energy generation and storage business by launching Tesla Energy. To accelerate the company's move into the solar energy business, Tesla acquired SolarCity in 2016 for $2.6 billion. At that time, one of the largest solar energy companies in the United States. Today, Tesla Energy offers solar energy generation and energy storage solutions, which includes solar panels, inverters, and batteries for both home and commercial use. Together, Tesla's solar energy system lowers the user's carbon footprint and energy bills while storing energy for the grid reliably and safely for use anytime, even in outages. The second operating segment is automotive, which is Tesla's bread and butter. So Tesla offers 4 consumer electric vehicles, and together they make Tesla's sexy lineup. They vary in price and performance, with the Model 3 being the most affordable EV in the lineup. Tesla is also expanding its EV lineup, namely the recently launched semi-truck, as well as the up-and-coming Cybertruck and Roadster. So these would be major revenue drivers for Tesla for years to come. And of course, Tesla's vehicles are all packed with some of the most advanced technological features in the auto industry. This includes its smart vehicle controls, interactive touchscreen display, and infotainment software, which can be updated via over-the-air software software updates. In addition, customers have access to several charging options including wall connector home charging and supercharger connectors for high-speed charging. But the most exciting development for Tesla, in my opinion, is Tesla's full self-driving technology, or FSD for short. Currently, Tesla's cars are equipped with an AI-based driver assistance program called Tesla Autopilot, which is basically a self-driving technology. So according to Tesla's vehicle safety report, in Q4 of 2022, Tesla recorded one crash for every 4.85 million miles driven in which drivers were using autopilot technology. And by comparison, in the United States, there was an automobile crash approximately every 652,000 miles. So if we do the math, if we take 4.85 million miles divided by 652,000 miles, that makes Tesla Autopilot 7.4 times safer than manual driving. In other quarters, Tesla Autopilot reported more miles driven before a crash. So for example, in Q1 of 2022, Tesla reported one crash for every 6.57 million miles driven in which drivers were using autopilot technology. So if we're using the same estimate for the United States, we can find that Tesla Autopilot is 10.1 times safer than manual driving. Now that's Tesla Autopilot. For Tesla FSD, which is more advanced than Tesla Autopilot, Tesla vehicles using FSD saw one collision for every 3.2 million miles driven as compared to 0.5 million miles driven for the rest of the United States. That makes FSD 6.4 times safer than other vehicles. So people who are skeptical, who are afraid of self-driving technology can see the data. It is clear that Tesla Autopilot is much safer than regular driving. In addition, as Tesla gains scale and collects more data, its cars will be smarter, and I think it's only a matter of time before FSD becomes 10 times safer than regular driving. That said, we could basically mark the first two steps of Master Plan 2 as complete and the third step partially complete. Now on to step 4, which is enable your car to make money for you when you aren't using it. So that's Tesla's plan to build an autonomous ride-hailing network of Tesla robotaxis. When FSD receives regulatory approval, we could see massive adoption of FSD, and that means people are going to buy Teslas and use them to make money for them, essentially by becoming driverless Uber cars. And with Tesla's autopilot progress thus far, it won't be long before step 4 come into full realization. And in my opinion, we could see Tesla cars making money for you within the next 5 years, and by then Master Plan 2 will be complete. Now let's take a look at the competitive advantages of the company. So Tesla is the first mover in the EV space, and because Tesla ventured into the EV space way earlier than its competitors, Tesla was able to build a vertically integrated technology stack which includes the batteries, powertrains, gigafactories, charging infrastructure, vehicle software, autopilot, and so on. And the technological expertise that the company has can be applied to develop new products, which increases the growth potential and market opportunity of the company. So for example, Tesla is developing Optimus, which is pretty much a human robot which could cost less than $20,000. Another example would be the supercomputer Dojo, which Elon claims to be competitive with Nvidia's H100. So during the earnings call, Elon explained further. So he mentioned that Tesla makes significant purchases of Nvidia GPUs and also putting a lot of effort into Dojo, which has the potential for an order of magnitude improvement in the cost of training. He also mentioned that Dojo has the potential to become a sellable service, much like how Amazon Web Services offers web services. While these developments are still in its early stages, they do open new revenue stream for Tesla once they become commercialized. But the point is, Tesla has repeatedly shown that the company is capable of innovating, which is one of the most powerful competitive advantages a company can have in modern times. So the second mode is scale. Not only has Tesla developed industry-leading EVs, but it has also actually done so at a massive scale. So Tesla is the largest EV company in the world, and according to Clean Technica, Tesla has an 18.2% market share in the global pure battery EV market in 2022. In the US alone, Tesla has a 62% market share, up from 59% in Q4. Although that figure is coming down slowly, Tesla still makes up more than 50% of EV sales in the US. With this kind of scale, Tesla can collect vast amounts of data, much more than its competitors, and this is particularly advantageous when it comes to developing fully autonomous vehicles. So for example, there are 2.7 million Teslas on the road that are collecting data each day, compared to just 1,000 for Waymo and 300 for Cruise. And that kind of scale allows Tesla to collect even more data than its competitors. So for instance, as of Q1, Tesla has accumulated over 150 million miles of FSD data, and the number is growing exponentially. So the data advantage that Tesla has could mean better FSD technology, and once FSD is fully launched, Tesla could literally just deploy robotaxi services nationwide almost instantly. And the robotaxi network could potentially disrupt the ride-hailing industry, which is dominated by Uber and Lyft. When drivers are not involved, the costs of running a ride-hailing network goes down significantly, which is going to be really hard for Uber and Lyft to compete with Tesla. The next competitive moat that Tesla has is its brand. So Tesla is like a cult, and its brand is so powerful that Tesla doesn't need to spend on marketing to promote its products. So here are some statistics to prove its brand moat. So Tesla has a net promoter score of 97, which is really high. And according to Bloomberg, 99% of respondents or Tesla owners said they would recommend the Model 3 to their family or friends, and 98% said they would buy the vehicle again. And according to Experian, Tesla has the highest brand loyalty. So 70.7% of Tesla owners who disposed of a Tesla acquired another new Tesla. And Tesla's brand is really strong because of its brand mascot, and you guessed it, CEO Elon Musk, because of its tweets, because of its dancing. I mean, it's always getting the media's attention. I mean, what about the failed Cybertruck demo where a steel ball shattered the bulletproof windows of the vehicle? I believe this was done on purpose to gain media attention. And last but not least, Tesla has cost advantages moat. The company has industry-leading profitability levels, and the company is able to achieve this through economies of scale even with ongoing expansion plans that put pressure on margins. For example, from 2018 to 2022, Tesla was able to reduce cost of production for Model 3 by 30%. And this is despite Tesla outpacing the growth of the industry. As you can see here, Tesla has higher growth rates as seen by the red line. On the other hand, operating margins continue to improve, as you can see here, as compared to the auto industry. So higher profitability means Tesla has the luxury of cutting prices, which motivates cost-conscious buyers to buy Tesla and therefore increase Tesla's market share. So for instance, a Wedbush survey found that Tesla is taking market share in China following its recent price cuts. So such price cuts also force competitors to consider cutting prices as well if they want to compete for market share, which puts them in an even worse position because of their thin margins that they currently have. As you can see, Tesla's average selling price has dropped over the last few years, but even with the lower ASPs, Tesla is still able to improve operating margins over the years, and that's cost advantages at play, and that spells danger for competitors. Now let's take a look at the financials of the company, starting with growth. So revenue for 2022 was $81.5 billion, which is up 51% year over year, and recently in Q1, the company has $23.3 billion in revenue, which is a 24% year-over-year increase. So growth was primarily due to increase in vehicle deliveries, but it was offset by lower average selling prices as well as currency exchange impact of $0.8 billion in Q1. Although growth has been decelerating over the last few quarters, these numbers still demonstrate strong demand for its products. Given Tesla's size, it won't be surprising for me to see growth continue to decelerate from here. So strong revenue growth was primarily due to surging EV sales. So total auto revenue was $71.5 billion in 2022, which is up 51% year over year. And we can also see that the auto revenue is also decelerating as the company grows over a larger base. So in Q1, the company has $20 billion of revenue in auto revenue, which is up 18% year over year. And this is due to increased vehicle deliveries as well as FSD. And it's also worth mentioning that in Q4, FSD in North America generated $324 million of revenue. So that is an annual run rate of $1.3 billion. And you can imagine how big this is gonna get once FSD is fully launched and once robotaxi services are, deployed across the world. So again, the full self-driving technology could really increase the value of the EV market. According to McKinsey, the autonomous driving market alone could be worth $300 to $400 billion by 2035. And once FSD goes mainstream, autonomous ride-hailing will be the next growth driver. And according to ARK Invest, the autonomous ride-hail industry is likely to create an $11 trillion addressable market, which is really huge. So in this chart, we can see Tesla's vehicle production and deliveries over the last few quarters. So auto revenue increased primarily due to growth in vehicle production and deliveries, and Tesla produced 1.37 million vehicles and delivered 1.31 million vehicles in 2022, which is a year-over-year increase of 47% and 40% respectively. And recently in Q1, Tesla produced 440,000 vehicles, which is up 44% year over year. And the company also delivered 422,000 vehicles, which is up 36% year over year. I do want to point out that Model S and X deliveries are actually down 27% year over year to just 10,695 vehicles. So Model S and X are the luxury line, which is more expensive than the Model 3 or the Model Y. And the drop in vehicle deliveries for Model S and X can show that there's really slowing demand for the more expensive cars, and that's why Tesla is cutting prices to really motivate people to purchase their cars even in this really challenging macro environment. So that's really something that I just want to point out. Nonetheless, Tesla is really showing strong growth in production and deliveries, and that should continue in the years to come. And that should be supported by the growth of the EV industry. So according to Bloomberg, EV sales increased 22-fold from 452,000 sold in 2015 to 10.3 million in 2022. So Bloomberg expects EV sales to rise again in 2023 to 13.6 million EVs globally, a 32% increase from last year. So by year end, there will be an estimated 40 million EVs globally, which represents around 3% of the global vehicle fleet. Although this figure seems small, it's a massive increase from less than 1% at the end of 2020. So the growth in EV is just getting started, and I believe we'll reach 100% EVs at some point in the future, and that trend alone should be a major tailwind for Tesla. Moving on, we can see services and other revenue, which is $6.1 billion in 2022, which is up 60% year over year. In Q1, it was $1.8 billion, which is up 44% year over year, and this is due to increases in used vehicle sales as well as paid supercharging. So this table shows the growth of Tesla's EV network, which correlates with services and other revenue. So we can see that Tesla locations is up 27% year over year, mobile service fleet is up 23% year over year, and supercharger stations up 33%, and supercharger connectors up 34% year over year in Q1. So as the network expands, more customers will be utilizing these services, and therefore more services and other revenue for Tesla. Aside from the automotive industry, Tesla also has the energy generation and storage business. So revenue for the segment was $3.9 billion in 2022, which is up 40% year over year. In Q1 though, it was $1.5 billion in revenue, which is up a whopping 148% year over year. So incredible growth there. And this is due to increase in deployments for both energy storage and solar. As you can see, the growth in this segment is accelerating. So this is going to make a bigger portion of the company's total revenue. So the strong growth in this segment was due to an increase in storage deployed, which is a 3.9 gigawatt hours, which is up 360% year over year in Q1. Solar deployed, on the other hand, was 67 megawatts, which is up 40% year over year. So for this reason, Tesla is also ramping up production at its dedicated Megapack factory in Lathrop, California, to meet excess demand for its storage products. So I think the energy generation and storage business for Tesla is going to be a really massive opportunity for the company. As you can see, based on a study by the IEA, Solar PV installed power capacity is expected to become the largest source of electricity by 2027, while coal, natural gas, nuclear, and oil generation are expected to plateau and decline over time. In addition, according to Bloomberg New Energy Finance, energy storage installations are projected to reach a cumulative 411 gigawatts by the end of 2030, which is a 15-fold increase from 2021. So all in all, Tesla's growth is nothing short of spectacular, and that is a confirmation of the ongoing transition to a sustainable economy. Although Tesla's growth is likely to decelerate, I think the company's growth story remains intact as it has strong competitive advantages as well as enjoying massive tailwinds from megatrends such as EVs, solar, and energy storage. So given its track record and potential, I see Tesla growing at least 20% plus in the next few years. So this is part one of a two-part video, and in the second part I talk more about Tesla's valuation, profitability, and risks. If you're interested in watching the video, you can click in this video right here, or you can find the link to the second part in the description below. Also, if you find value in this video, I would appreciate it if you hit the like button and subscribe to my channel. Thank you, and I'll see you guys on the next video.